Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. We've had a slurry of news across the board. Not much has happened price-wise. We've had Powell speaking twice in the Senate and the House, becoming increasingly hawkish, leading to the conclusion that he will probably raise rates, he being they, at FOMC on the 22nd. Raise rates to a 50 basis point clip rather than a 20 basis point hike, which was previously sort of baked in. We've had employment numbers today that were better than expected, job openings numbers that were larger than expected. So all this is pointing increasingly to tight jobs numbers. Now we have more jobs numbers. Tomorrow, jobless claims. Then on Friday, we have the big whammy, the unemployment rate, which is expected to remain unchanged. So if these numbers come in signaling a tight labor force, then markets will be more inclined towards that 50 basis point hike than a 25 basis point hike. Ultimately, though, the CPI print on Tuesday the 14th may seal the deal one way or another, whether or not we see hikes larger than previously expected. Here's the current rate probability curve, and whether or not this is truly signaling higher for longer will remain to be seen, but it is certainly higher than it was, the probabilities anyway, as of even last week. And the rate cut scenario, the true pivot of the Fed, is aligned with Bitcoin halving in April 2024. So if that lines up, should be interesting for price. But in the meantime, we sort of have to navigate the next year of news, regulation, announcements, banking, problems, that sort of thing. Now, if we look at the inflation forecasts, this is nowcast from the Fed Bank of Cleveland, and they do have CPI coming down slightly month over month. So we'll see how much of that actually gets baked into CPI, and then Trueflation, of course, is a real-time estimate of inflation, and that is also starting to increase its decline, actually, in that 5 handle range, previously to now 4 and change. We also have liquidity estimations continuing to decline. This is pre-COVID, obviously, and realistically, the Fed wants QT to essentially return to that pre-COVID level. I don't know if they'll get there. I don't think they know if they'll get there. They certainly have a long way to go. But as they raise rates, that certainly sucks liquidity out of the ecosystem, even as far as the reverse repo are concerned. And those continue to rise to multi-week highs as well. So there are many signs pointing to liquidity getting pulled out of the system, at least temporarily, as rates remain high. We also have Silvergate, which was synonymous with cryptocurrency companies as far as banking relationships go, finally announcing today that they are closing the bank. They're liquidating, winding down operations there. Essentially what happened there is they took on a significant amount of concentrated risk in digital asset businesses, and their deposits grew accordingly, and so did their withdrawals. And there was certainly a large run risk there. FDIC stepping in, some rumors that other large institutional players may step in. I believe the users of the bank are actually okay because of the FDIC insurance, but not a good look for banks, for regulators to see a crypto-associated bank essentially go down in flames. Maybe it was their own mismanagement, but it certainly signals that banks should not be concentrating risk with a single industry. And along with the slurry of news, we've got Mt. Gox coins 10 years out now, finally, potentially, maybe getting released this month. I know they pushed this back as far as the application. You had to fill out a series of applications as a creditor to prove that you were you and that you had coins on Mt. Gox, and this is going on and on and on and on and on. The good news is we'll see this happen in real time. It's not going to be a secret. It's not going to be a mystery when this stuff moves. That's the beauty of blockchain, and a great example of that is the US government moving a bunch of Bitcoin around on chain, and we can see that happen real time. We can see where it's going. Some of it got peeled off to Coinbase, so there may be an auction down the road. These are believed to be Silk Road related Bitcoin. And we also had GBTC getting an early win in their lawsuit against the SEC for ETF conversion on their GBTC product. This is a very large discussion. We have a hedge fund at Valkyrie specifically taking an activist position because of the large discount, because of the fees, because of the closed nature of the fund. But all in all, this is a win for Grayscale if, in fact, the courts rule in their favor. There's a 3 to 6 month window where courts will deliberate now and make a decision. The court, rather, the 3 judges of the court. And you saw the discount close pretty significantly relative to where it had been previously expanding. Now, there are other products continue to hold a discount. There are even non-Grayscale products, closed-end funds that hold a discount over 40%. So there's still other problems to be had here, but in the long run, we're getting closer and closer to potentially, maybe eventually having a spot Bitcoin ETF down the road. And because that wasn't enough news this week, we also had Biden proposing a budget where they removed the ability to tax loss harvest on trades. We'll see if the budget comes to fruition. I think they tried this previously and it failed to pass, but we'll see what happens on that front. On the ordinal front, Yuga Labs, one of the biggest NFT minters, creators, one of the best known, Bored API Club on Ethereum, minted a collection and collected 735 BTC, amounting to around 16.5 million USD. Now, you may have reservations or concerns about NFTs or don't care, like me. You know, if it's allowable by the protocol, so be it. What I'm much more interested in is the long-term effects of this new fee revenue for miners, for the security budget down the line, this new scripting language that's actually being used. It's not just an idea anymore. This comes from Taproot, which got implemented onto the chain at the end of 2021. Nobody was using it for years until this came about. So we're still seeing mints effectively of these NFTs, and we're seeing it at a time when we're not in a bull market. We're in really the doldrums of bear market sideways chop. So I'm excited to see what will happen to this once markets take off again. If we see, ordinals clogging the chain, if we see fees going towards infinity, all hyperbole, of course, but it's good to see activity not tied strictly to price. That's the bottom line here. Brings eyeballs and attention, new users, excitement for anything other than price. Now, there may be speculation tied to what people are doing with NFTs very clearly, but at the end of the day, it's a win for Bitcoin to bring people on board and use the chain. And speaking of using the chain, we're also seeing bridging to Avalanche. Bridging just means basically moving it from one chain to another via some sort of wrapper. Wrappers are under, let's just say, SEC surveillance based on the Luna lawsuit. So these may or may not be securities based on what the SEC is saying. But what we're seeing here is a pretty substantial growth in the BTCB supply on Avalanche. Now there's also wrapped Bitcoin, WBTC. You can see wrapped Bitcoin falling off, BTCB sort of taking its place here. It doesn't make sense to me necessarily as why people are doing this. Usually there's an incentive to do so. Based on where BTCB is sitting in the Avalanche ecosystem, the incentives just aren't there to move this to Aave as far as I can tell. We're talking about less than a 2% yield. So maybe there's some sort of borrowing lending scheme that I'm just not aware of. But at the end of the day, even wrapping Bitcoin, it's risky. It has issues, but it does use Bitcoin basically as collateral in these cases in the DeFi ecosystem. So it sort of bootstraps Bitcoin in ways that Bitcoin itself natively cannot participate in DeFi. So I'll take that as a win as well for Bitcoin. More use cases, the better. It's a big tent. Anybody can do anything with it. That's what it's all about. And talking to the TradFi side of the house, looking at the 60-day rolling correlations to sort of US indices and Asia indices, we're seeing a pretty marked decline in correlations to S&P, correlations to NASDAQ, seeing a rising correlation slightly to HSI, and a declining index to the Nikkei. So I think this helps our narrative to say that we are an uncorrelated asset, certainly over time, previously to 2020, based on the window you're looking at for the correlation period. Correlations are all over the board typically and have zeroed out pre-COVID, Post-COVID, those correlations have increased substantially. So this, to me, strengthens the argument that Bitcoin may have bottomed first, crypto assets may have attempted to bottom here first, whereas legacy markets may have a while to go. Certainly that's an optimistic viewpoint, but it's one that's certainly possible with the pending rate hikes we still have to come here. Looking at the S&P, on technicals, it's really been sideways, really hugging that 4,000 zone. Really did not see a substantial rally above that 4,100 level just yet. Still above the previous diagonal resistance, still above the 50, still above the 200, largely above the 50 anyway. Any sort of bullish rally continuation is looking less and less likely over time here, but should this play out, which is extremely unlikely, that's the eventual, we'll call it multi-month target, 4,500. Now, no one is forecasting that because it doesn't make too much sense based on the fundamentals. But once everyone cleans house, that's certainly a technical level to watch. And as we're getting increasing hawkishness from the Fed, we're also seeing the DXY strengthen, which is generally bearish for anything denominated in USD. And at this point, we may be hoping for an Adam and Eve situation, a double top here, could be a multi-year, multi-month double top. And ultimately, we need to wait for rates, or at least the rates differential relative to the DXY basket, those countries in that basket, the Euro, the JPY, that sort of thing, to see whether or not the DXY will come back down sub 100 again. As far as Bitcoin is concerned, not too much has happened since the last week over week, really just ranging between that 22, 23 zone. There was some after hour sell-off a few days ago relative to the Silvergate news, I think. But overall, not too much has happened, generally. Obviously, if you're not accustomed to this volatility, you're probably thinking this is a substantial decline as of, March, the beginning of March. But this is definitely par for the course on that front as far as crypto is concerned. Looking at this, again, we're still above levels that you'd consider the litmus test for bullishness relative to technicals, above the 200, above the cloud, above the previous, diagonal resistances, that sort of thing. Really, the overhead resistance now is still the 200-week moving average. And I do like the 30K range should we break out of the 25K resistance. But ultimately, this is what it comes down to, just sort of focusing in on a specific trade idea. We may have some sort of, messy Frankenstein's monster of a inverted head and shoulders at this point brewing. We may see shoulder, head, shoulder for head and shoulders. We may see a retest of the 18 to 21K level based on the slurry of news we're getting, regulatory banking, the Fed, macro headwinds, geopolitical risks. Looks like they're very likely ready to take on TikTok here in the United States as far as a potential ban is concerned. So there are a ton of variables right now. And I think that's why you're seeing the volatility you're seeing. But I still like 20K as a support, 25 as a resistance, and that's that. We can range around here until the picture becomes more clear. And on top of all that, we've got Ethereum finally potentially unlocking the staked ETH come April. That's not set in stone yet. That may be delayed further, but that's also coming down the pipe within the next month. There's currently 17.5 million ETH locked in staking. This ETH can't get unlocked all instantly. It has to basically stand in line. It takes time. That's for security reasons on the network. Most people expect some of this to be unlocked. 80% of this ETH that's been staked is underwater, meaning it's not in profit. So there's maybe less of a reason for people in general using logic to unlock. Now we know that people love to sell the bottom and buy the top. So there may be people panicking, looking to unlock. We'll see what happens when the unlocks happen. But again, it won't be a secret. We'll be able to see all this happening in real time. And it's really better for Ethereum that the staking becomes liquid again. I think that is sort of the last chapter into giving people confidence that this chain is fully proof of stake from top to bottom. The first step was the transition from proof of work to proof of stake, and now it's from proof of stake to non-liquid proof of stake to liquid proof of stake without using some sort of derivative like staked ETH. And the technicals for ETH, much like BTC, haven't really shifted any direction. Still within this multi-month range. You could argue a near-term, M double top type of situation. You could argue even a lower time frame falling wedge, but I don't see high conviction here one way or the other. at least in the near term. Ultimately, though, the range low is here, the range high is here. The idea of a range is you stay within it until there is an impetus to go above or below, and that's just how it is. And right now, there is, again, too many variables swirling with regulation, banking, inflows, outflows, exchanges, the Fed, macro headwinds, to really be hyper convinced one way or the other here. Lastly, ETH/BTC also essentially flat, still within this 600 plus day range. I'm still relatively bullish on ETH/BTC, especially if it breaks that 08 level. And I really think it needs to do it before Bitcoin's halving, because once Bitcoin's halving occurs, then ETH will have less of an advantage as far as the issuance narrative is concerned. And if more BTC NFTs get minted, BTC gets thrown into DeFi, that ETH narrative generally starts to shrink, and the ETH/BTC strength may also start to shrink. That's all I have for this one. This video is for informational purposes only, and the opinions expressed are not financial or investment advice. All opinions are my own and do not reflect the opinions of Valkyrie Investments and its affiliates. No fiduciary obligation or duty exists or is created between you and Valkyrie Investments or its affiliates, including me, by virtue of any opinions expressed in this video.